At Rivian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, March 29, 2023, why is Rivian stock up 11% today? The EV upstart demonstrates strong customer demand. Shares of EV upstart Rivian Automotive popped up sharply during the midweek session. Stronger than expected real-time demand bolstered enthusiasm. Rivian stock still faces a tough economic backdrop. Struggling for traction amid last year's inflationary pressures, electric vehicle upstart Rivian Automotive, Nasdaq RIVN, finally enjoyed some positive momentum. After jumping 9% to start the midweek session, Rivian stock gained about 11% in the late afternoon. A combination of strong than expected demand and troubles among its rivals created downwind benefits. Primarily, Benzinga cited research by Needham analyst Chris Pierce, who analyzed state vehicle registrations. According to Kelley Blue Book sales data, owners registered a total of 8,145 Rivian EVs in the first quarter. This tally compares favorably to the consensus estimate of 7,167 vehicles forecasted to be registered in first quarter. Pierce also noted that first quarter used vehicle data confirmed that the second-hand market offered fewer used Rivian vehicles than competing EVs, including Lucid Group. Needham currently features a buy rating on Rivian stock and a $26 price target. From the time of writing, the estimate represents an upside potential of approximately 80%. In addition, the stronger than expected demand figure adds more weight to Rivian's ambitious target of delivering 50,000 vehicles for 2023. Enticingly, the three most recent analyst assessments, from Morgan Stanley, Truist Financial, and Barclays, feature a reiteration of buy ratings. As well, among the three, the worst upside target is again $26 per share. Competitor troubles may have bolstered Rivian stock. Along with fresh evidence of the Rivian brand resonating with customers, Rivian stock may have also benefited from rival missteps. In particular, Lucid, which focuses on premium electric-powered sedans, recently announced layoffs. Therefore, from a comparative standpoint, Rivian seemingly appears more credible. According to Barron's, Lucid will reduce its headcount by 1,300, roughly equivalent to 18% of its workforce. This action is aligned with the cost discipline announcement we made in late February when we reported earnings, wrote Lucid CEO Peter Rawlinson in an email to employees dated March 28. We are also taking continued steps to manage our costs by reviewing all non-critical spending at this time. Still, prospective investors of Rivian stock should note that Rivian itself played the pink slip game earlier this year. In February, Reuters reported that the EV maker announced the laying off 6% of its workforce. Primarily, the motivation for the headcount reduction struck a familiar note: cost reduction. In addition, the news agency noted that Rivian suffered from falling cash reserves and a weak economy. As well, the enterprise braced for an industry-wide price war. Although Rivian stock looks like the winner now, it's been a challenging ride overall for the underlying company. Since the beginning of the year, Rivian slipped 17%. And in the past 365 days, shares dropped over 73% below break-even. For comparison, Rivian stumbled 72% in the trailing year. Sector king Tesla, while gaining tremendously percentage-wise in 2023, lost almost 48% in the trailing 12 months. Why it matters? On balance, Rivian stock carries a consensus moderate buy view among Wall Street analysts covering the security within the past 3 months. This assessment breaks down to 13 buys, 4 holds, and 2 sells. The average price target stands at $28.11, implying a 96% upside potential. Thanks for watching. Rivian Capital News. Please come back tomorrow for another stock news update. Thank you.